evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Ekta Batra. It was a down day for the markets despite getting some positive cues from Asian and Wall Street early in the morning. Of course, the cues became negative from the globe as Europe opened, but we had perhaps ourselves to blame for the kind of down day. Results were none too good, and the markets were still smarting with the double whammy of poor results and a credit policy that didn't help yesterday. Hi, Ekta.
Hi, Lata. Absolutely. So the Nifty just about held 8,700 in today's trading session. The only little bit of light was that we recovered from intraday lows today. But let's take you through the top stories we're tracking this evening. Markets sell off in late trade with the Nifty closing lower for the fourth consecutive session. Markets were pressured by PSU banks, capital goods, as well as select IT stocks. Oil and gas, metal and defensive stocks such as pharma and FMCG held up.
Bharti Airtel disappoints in the third quarter. African business drags revenues, but profits are on target as volume growth remains steady.
The RBI governor in the post-policy conference call says, referring to growth, that we are on the outskirts of the woods but not out of the woods yet, and says still battling inflation but global deflationary environment helps.
Well, in stocks in focus today, ONGC gained as the oil ministry proposed a new subsidy sharing formula for upstream companies, and from the earnings stable, Canada Bank, Central Bank and Wockhardt react positively to their quarterly numbers. Well, those are some of the headlines from the market, and here are the experts that we have lined up for you today. Market perspective from Manishi Chaudhary of BNP Paribas. On the corporate radar, Paul Polman, the CEO of Unilever, will join in to talk about his big plans for India, and we will also get you some of the global opinion. That includes opinion from Shane Oliver of AMP Capital Investors.
Okay, well, first up, straight to the day's trading action then. Markets slipped for the fourth straight day as volatility continued to rule the roost today. Anuj joins in with the day's trading action.
Well, clearly the bulls are taking a bit of a rest, a bit of a breather after the kind of run that they've had, and maybe are launching another assault. But for now, the markets are having a bit of a problem because of two or three reasons. Earnings are missing estimates. The banking sector has taken a bit of a backseat. The Bank Nifty has lost leadership. In plain simple terms, the Bank Nifty is now down 8% from the recent highs, and even today the Bank Nifty led the declines. So clearly the market right now is a bit nervous, and earnings, the Delhi elections, all these are irritants for the market right now. Let's talk about the stocks that dragged the market today, and as I said, it really was again about banking stocks. Axis Bank in particular looked particularly weak today, down about 5% in trade. SBI was down 2%, Kotak was down about 1%. Some other prominent Nifty losers were three stocks which looked like were taking over the leadership mantle but corrected today. Stocks like L&T, Tata Motors, TCS, all these three stocks were actually doing well all through the week, but today had a bit of correction. And some other prominent Nifty losers included BHEL, Reliance and Maruti Suzuki. In terms of gaining stocks, it was a day for commodities. Metals first, big gainers in stocks like Hindalco, Sesa Sterlite, Tata Steel, up between 2 to 4%. Then, of course, you had some oil and gas stocks doing well. Cairn was up about close to 4%. ONGC was up about 2.5%. And then, of course, you had Coal India that was up about 2.6%. And finally, in the mid-cap space, it was a bit of a mixed bag, though the index was down, but there were some big winners as well. Wockhardt was up 9% post what looked like a good set of numbers. Crompton reacted negatively to earnings, down 6%, and Jet Airways reacting to stronger Brent crude prices, down about 5%. So that's the day. As of now, it looks like the market is struggling a bit at higher levels and needs the support of either banking stocks or some other stocks to take back the leadership mantle.
Yes, I take your point, Anuj. Bank Nifty quite clearly gave up its leadership status, and the banking stocks were also smarting under a double whammy, as it were. The governor, in a conference call today, repeatedly explained that he wants a real difference of 1.5% to 2% between between policy rates and inflation. And if he sees inflation at CPI, as the CPI at 6%, as his forecast yesterday said, then you add another 1.5% to it, the repo rate doesn't really go below 7.5 by his calculation. So that's what kept even several of the NBFC stocks down. Notable, for instance, is LIC Housing Finance, which actually ran up a goodish bit. You saw sell-off there. Axis Bank saw profit taking, as Anuj just said. And you had a lot of the power stocks as well not doing too well. A lot of the infra stocks not doing too well. And of course, BPCL, HPCL, along with Jet Airways, were reacting to that higher crude prices. So at the moment, neither emerging markets nor commodity markets nor banking stocks are the flavor of the moment, and all that were reacting on the Indian market. As Ekta said, now the level to watch would be 8,700 on the Nifty because a lot of options are piled up at that level.
Yes, absolutely, and just about 23 points away from that, so hopefully it shouldn't be another fifth consecutive session of selling for us. But time now for some market opinion. Manishi Ray Chaudhary of BNP Paribas is positive about the growth outlook for India and says that India has been the biggest beneficiary of the decline that we've seen in commodity prices.
Investors are beginning to question that the hype about India, which was quite apparent, in the post-election season, is that sort of misplaced, or was it too early? India still remains one of the biggest beneficiaries of commodity price decline, and the growth outlook is now better. Growth clearly bottomed out about 4 quarters ago. And, that's actually a rare occurrence in the entire emerging market universe. So, I think the longer-term bullishness is still there, which is reflected in the flows. But over the short term, I think there is some concern in the investor's mind. I think, some small amount of, adjustment to this massive inflows that India saw in the second half of 2014, that might happen. I would not characterize it as a large-scale fund pullout because, the allocations to Asia or emerging markets themselves, they have actually declined. And, in an environment of US dollar appreciation, like we have seen over past 6 months and are likely to see going forward, that has never been good news for emerging market flows. I think, to some extent, in the private sector banking universe, this problem of increased NPLs, that has possibly got discounted into the valuations. We have seen the likes of ICICI Bank correct, over past few days. Over the longer term, or even over the medium term of maybe next 2 to 3 quarters, we are still relatively more comfortable about the private sector banks.
And now for all the action from the futures and options space, let's cut across to Nigel D'Souza.
Well, in the derivatives market in today's trading session, call writing makes you money yet again. So the 9,100 call, that was getting written in today's trading session. The 8,900 call as well was getting written. Well, take a look at the 8,800 call. Now, over the last few trading sessions, that one has been getting written. So that's telling you the near-term resistance for the Nifty should be at around that 8,800. And if you're writing that particular strike, the premium fell today from around 165 rupees to around 130 rupees. So their stop loss comes in at around 8,920 odd. That's a good 200 points away from current levels. So that's a strike you should be looking out for. The 8,300 put today saw a good amount of open risk build up. The premium over there went from around 27 rupees all the way to around 30 rupees. So some out of the money, low level put buying in case all goes wrong, given that the Nifty has corrected a good 300 points on the top. There is some low level put buying and maybe some protection buying as well. The 8,700 put, that should be the near term support because there was a mix of action today in today's trading session, and the premium today went from around 112 bucks to around 127. So watch out for this particular strike. That should be when the Nifty gets some kind of support. Individual stocks that will focus. SBI was getting sold into in today's trade, while Axis Bank as well. The second day running, the stock was down close to around 4%. Big open risk build up seen on that counter as well. Cesar Sterlite has been getting hammered, and for the last couple of trading sessions, the stock has seen a good short covering bounce, while from the broader markets, stocks reacting to their numbers were getting sold into. So the likes of Century Textiles as well as Crompton's, both of them in fact did see a big open risk build up. Both those two stocks are down more than 5%, while TVS Motors did come in for a big short covering bounce in today's trade. Another stock that was fairly active was Vocart. That one saw a big buying post its number. The stock ended higher by close to around 9%.
All right, Nigel, thanks very much for that. Well, now focusing on some more stock-specific action, ONGC was one of the top gainers in trade today. The stock surged on the back of a CNBC TV 18 report that the government is moving to iron out the subsidy sharing formula and fast-track the ONGC divestment. Sources say the oil ministry has asked the government not to impose any subsidy burden on upstream companies if crude prices stay at or less than $60 per barrel.
Well, in the FMCG giant Unilever is bullish on India. The CEO, Paul Polman, believes the country has immense potential, which is likely to bear fruit given the government's commitment to implementing reforms. Let's listen in to some of the comments that we got from him.
Well, there's certainly a level of optimism that has crept into India, quite different from when I was here a year and a half ago. The programs are also clearer, and there's a certain level of ambition to implement them very quickly, be it Clean India, be it Make in India, be it smart cities. These are all enormously important programs for both the development of India, where still too many people are left behind, and then also, obviously, directly the development of the economy. The global economy is still difficult, there's no doubt about it, but there is increasing hope that the Indian economy will, in the next few years, be amongst one of the faster growing economies. The Indian market is a healthy growth market. Even if you have a 5-6% growth rate, 5% now if you look at the IMF, it's very healthy. As I said yesterday as well, if Europe would have that growth rate, we'd all be very happy. Obviously, you want to improve on that, and I think all the steps are being taken to actually get there. Consumption right now is probably, it's still increasing at 5%, but we would rather see that move up by 1% or 2% in the coming years, and especially lifting the rural people out of poverty. We've been one of the biggest investors in India in the last few years, I believe the biggest investor, and that is certainly a sign of confidence that we have in this economy for the long term. We've been here for 100 years or longer. We're an Indian company, and there's no reason, being the second biggest country in the world that you are, that we will not be here for hundreds of more years to come.
Okay, well, some important new opinion rather coming in there. But moving on to some more global opinion. Shane Oliver of AMP Capital Investor says Asia is the place to park your money, and India still remains the top pick in the Asian basket.
I still remain very sceptical about Russia, for example. I'm sceptical about Brazil. I think both of those countries, and particularly South America, have big economic problems which will make life a little bit difficult over the years ahead. And therefore I tend to think that if you're going to focus on the emerging world, the place to be is probably Asia, which of course at one end is you've got India, which is continuing to do reasonably well despite being relatively overvalued. My feeling is that commodities are now in a secular bear market. We've gone from a situation of undersupply last decade, now we've got a situation of oversupply for many commodities, and that suggests to me that there's more downside ahead over the years ahead for most commodity prices. Yes, we've seen a good bounce. Partly that bounce is related to the US dollar. So the US dollar has come off a little bit in the last day or so, and that's enabled the commodities to bounce back because commodities tend to be priced in US dollars.
All right, Shane Oliver, happy with India, but does think that PE valuations are a bit rich. Let's take a break on that note, but coming up, we'll have some trading strategies from Sudarshan Sukhani. We'll also get you a wrap of some of the big earnings.